A very good Friday morning to everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for August 18th, 2017. Well, my goodness, my concerns yesterday about that price action and my caution that I know many of you probably thought was just, Doug being Doug, being overly cautious. But that price action right here, combined with this right here, gave me a lot of concern. And I mentioned that the battleground yesterday was going to be, right in this area. And if that battleground was won by the bears, we would strip out this gap, and that would really damage the overall chart. Now, yesterday there was significant technical damage created, and I look at this as this right here was a warning shot. Okay, we were being warned. Caution, careful, watch out what you're doing. This one right here was the second shot. And this one is creating some technical damage. So first off, here in the diamonds did break the uptrend, close below the uptrend. Now that can be repaired. You can see right down here we did the same thing. We can respond right back and repair that damage. Typically, that would require some time to do, but we can, as you can see, come right back. Now the difference between this pattern here and this pattern here is significant. This pattern, we just had a consolidation breakdown testing this trend, and we responded right back. This pattern, however, is much more significant. That bearish M pattern right there is going to make this a challenge. Now, can we repair it? Absolutely, and I expect we could even get a short-term oversold bounce today. And when I say short-term, I mean intraday bounce. So bounce back up into here, certainly possible. Bounce back up into here, very possible. Okay. One thing about a market top, if this is a market top, is a process. It doesn't happen all at once. So normally we see a considerable back and forth, before we actually get that big selling move down. I'm not suggesting that's what's going to happen, just only that we're starting to get signs and technical damage occurring in the charts that we should not ignore. Let's take a look at the SPY. The SPY is where the most technical damage was created. Here's this rally, this breakdown, broke the trend, rally back, test the trend, test the highs, make new lows. Unfortunately, it came all at once. Didn't give, you had to be pretty quick yesterday to take advantage of it. And as, I was gone yesterday visiting a back doctor, I didn't get to take advantage of this like I did this one. So now what do we do from here? Well, first let's take a look and notice that we closed not only below this low, we closed below the 50-day moving average. So damage has been done here. Now, I think this is short-term oversold. We could move a little bit lower, but short-term, I think it may be oversold. Notice that the 34 EMA, the 80 EMA still have not even crossed over the 50. So we could plan for or expect for a little bit of volatile action in here, kind of waiting for these things to roll over. That can mean more down and then a rally back up. It can mean several things. So be careful and watch this market. I don't think we're going to just sink, but we could certainly come all the way down to here pretty easily. Okay, so make sure you're protecting yourself. Make sure you have a plan for that. Looks like we're getting a shakeout here. Now, one thing I think you can expect is a lot more volatility in the daily price moves. which means a lot more whipsaws, a lot more very fast price action. So this is going to be a challenging period here, I think. And if you are a new trader, inexperienced trader, a long only trader, might be a good time to curtail your activity, stand on the sidelines, maybe do a little bit more paper trading and practicing rather than stepping into this battle. This could be a very difficult battle to trade. During past market highs and tops that we have seen, we suddenly go from 20, 30, 40, 50, 60 point type moves intraday to moves of several hundred points in a day. And that's the kind of volatility that I'm talking about. Big potential swings, things that could really be difficult and chop up an account very quickly if you don't know what you're doing. And it's going to challenge even the best of traders. It really will. So if that occurs, so be careful, have a plan. Now, ahead of a weekend here, I plan on largely standing aside today. We're going into the weekend. I don't see any reason for me to be buying anything up. There's probably going to be a few more shock waves to this move here. And I can wait until Monday to get into that fray. So probably will do mostly a lot of standing aside, just managing current positions, protecting my account, doing the things that I need to do to be safe in my trade. Let's take a look at the Qs. Now the Qs held up a little bit better. The Qs didn't suffer as much technical damage, although we still have that ugly pattern, that breakdown, that rally back and failure. The best thing about the Qs here is it didn't make a new low. So as of now, that low of last week held. Okay, and we also held the uptrend. So as far as technical damage goes, this does show technical damage, but not nearly as severe as that of the SPY. So we'll have to keep an eye on this. This could easily just continue to break down, or we could find a bounce in here that rallies us back up to resistance levels, okay? Where we would look for, clues for additional failure. If we look at IWM, now IWM hasn't been pretending for quite a while. IWM just, crashed right through this level of support. Bang, just broke right through it. And not only that, it sliced right through the 200-day moving average as if it weren't even there. Just ripped the guts out of it. So here we have a moving average pattern, break down through the 50, rally back up here to test the downtrend and the 50, failure to the 200, rally back to test resistance, failure through the 200. That puts us in an ugly situation here on IWM, and certainly a rally back at any time to test this resistance level and the downtrend could occur. But I suspect we're going to see this level right here on the IWM fairly quickly. We're going to drop right down into here. We have a nice level of support here. So it would not surprise me at all to just see this continue to sink right into here. And that's going to make it difficult for the overall market, I think. With the biggest of all the indexes continuing to show sell-off, that's not good. Now, if we fail through here, we could see some real damage in the market. Okay, so be careful. Let's take a look at the VIX. Oops. Now the VIX, I've been mentioning that if we happen to get back above this area and hold this area as support, or even up into here and hold as support, that's where we're going to look for the trouble. And this pullback, remember I was mentioning we were holding above this area to be watchful of that for a quick potential reversal. And sadly that did come into play. So What I think we're going to be looking at is higher volatility going forward, more challenging price action, bigger potential intraday moves that are going to be difficult for a lot of people to trade. So plan accordingly, be careful. Remember, not every day is a good day to trade. You do not have to trade every day to be successful. Now is the time maybe to do a little more watching and waiting. For those that don't trade options, start looking at those inverse ETFs. There's probably going to be very good signals going to be created in those inverse ETFs for protecting yourself in a down moving market, if that does occur. Okay, we can still repair this, but I'm just issuing that as some major caution. Be very careful at this point. Okay, everyone, have a great day. Oh, by the way, on the economic calendar, we have consumer sentiment and a Fed speaker today, and there was only 11 companies or 11 or 12 companies reporting earnings today. So nothing major there to be concerned about on that. Hey folks, if this is the first time you have seen these videos, do me a favor and click that subscribe button on YouTube, and also the follow me button or like button there on Facebook, because I do turn out this information every day, produce it every day, and not just because I'm trying to promote this or anything like that. What I'm trying to do is help other people trade, and I've been doing this a long time, and I have found my market preparation is extremely important to my trading day. So if I can share that and help others with their trading day, I'm happy to do that. And it's just part of what I do every day. So please feel free to take advantage of that. And also, click that like button, that thumbs up button, or leave me a comment if there's something that you'd like to see in these videos. I'd sure be willing to consider that. Everyone, take care. Have a great weekend. I wish you fantastic profits, and I'll talk to you all soon.